Great. So welcome to the continuation of the question that we were solving. So here write fair value gain or loss. And then down here for us to fair value gain or loss. So fair value gain or loss. So here you compare that of the fair value that you have at the start of the year to that of what at the end. If there's any changes, it must be reported in the fair value. Perfect. So that is it. Great. So let's check the fair values that we have. The fair values of the assets. So at the end of the first year, we had a fair value of what? 40,000. Meanwhile, the asset fair value at the start of the year is what? 35 million. That's how much they bought the asset for. So from 35 increasing to what? 40 million. So that means there's a gain of what? 5 million. So let's go and record the gain in 2016 financial year. So there's a gain of what? 5 million, which will be reported in other income, specifically. Other income. Second, we continue the next year's on. Then, as at 31st December 2017, the value dropped from 40 to 25. So here you compare the difference between the open balance. Now the open balance is the same as what? Closing balance of the immediate year or the past year. That is the 2016. So from 40, it dropped to what? 25 in 2017. So there's a what? Loss of 15. So in 2017, fair value what? Loss. So let's go and put it in fair value loss of what? 15,000. And this loss must be reported in the operating expenses. The loss must be reported in operating expenses. Great. Must be reported in operating. Loss or gain goes to the P&L. So both other income and operating expenses are in the P&L. Yeah, good. But OCI is not in the P&L. The difference between this and then the other. Then let's look at the last one. The last one, 31st December 2018. The fair value increased again from 25 to 30. So another increment of 5. Then you put them in. So 5 gain. So we are done. Then the financial position, you record the fair value in the financial position. The balance sheet will take the fair value at the end of the period. So this is the point 3. That's the point 2. Any gain or loss on fair valuation we recorded in the P&L. That is what we have done. So the point 3, the building will be stated at fair value. That means in the financial position, FP balance sheet, the fair value of the assets, the building will be stated at what? The year 1, the building will be stated at financial position. Yes, statement of financial position. What we did first, the P&L, this is the financial position. The fair value at the end of first reporting year happened to be what? 40,000. So here 40,000, drop to 25,000, increase to 30,000. Good. So that is how we will get it.
Now we write it then.
Yes, please. So that's what will go in the fair value. Go into the building as the fair value. The fair value of the building.
The fair value of the building will be 40, 25.
And 30 is paid. Now IS 40 also deals with transfers. It also deal with transfers. So we look at transfers. How to deal with transfers.
Right. Don't need that if you want to bring. No need.
The D part. Let's continue the game. Now the next section talks about the IAS 38 intangible assets. So the following information related to Samampa Limited for the year ended 30th June 2020. So during the year, the Information Technology Department, that's the IT. So the Information Technology, that's the IT, and then the Account Department of Samampa Limited developed an accounting software called Cash Master. Called Cash Master, which will be used by the company to handle all receipts and payments. All the resources used in generating the software were owned by the company and therefore forms part of the general overheads. Now this is IAS 38. It has three items. So let's quickly look at the three items that the IAS 38 prescribes. So under the IAS 38 intangible assets, basically three specific issues that it was raised there, which are not new, so which are not like the old one. So let's quickly look at that.
Ah, yes, that's it.
Yes, IAS 38 talks about the intangible assets, and then we should look at the following items under it. So IAS 38 intangible assets. So intangible assets, IAS 38, intangible assets. Now, intangible assets are assets that do not have a physical character. Assets that do not have a physical character. They normally exist in the receipts. Receipts in the form of paper. Example include intangible assets. Example, goodwill, patent, copyright, license, trademark, logo, deferred development expenditure, software. Software is also example of intangible assets. Good.
Google patents.
Goodwill, patent, copyright, logo, trademark, and deferred development expenditure. These are examples of what intangible assets.
Deferred.
Good. Now there are three specific issues that we should get them well under the IAS 38. Three specific issues that we have to get them well. So we list them on the board and then we look at them. First, we should look at how we deal with intangible asset with definite and without definite life. So intangible assets with and without definite life. So intangible assets with and then without definite life. Then two, internally generated intangible assets. Internally generated intangible assets. Generated intangible assets. Then lastly, we should look at research and development costs. Then finally, in fact, there are three issues. The other issues, they are normal issues that we know in IAS 16. How you record them, that is the measurement and the recording of the intangible assets. It's the same as how you record and measure what PPs. So if we know how to measure and record PPE, the same thing applies to the IS 38. Initial measurement.
Is it different from inventory?
Good. Now the IS 38 is asset that to be used, just that they are intangible. IAS 2 is inventory. That one they are specific or type of asset that we acquired for resale. Good. So that is the 10 difference between them. Now, we should know all these three items. So we will talk about them briefly. Then we continue the game. So let's start with intangible assets with definite life. That means if that intangible asset have a useful life, how do you treat it? If that intangible assets have a useful life, so if the intangible assets have a definite life, then that asset must be what amortized over what over the useful life of the asset. So any intangible asset with a definite life, it must be what amortized. So definite life must be amortized. Indefinite, so without a definite life, we don't amortize them. We don't amortize. Instead, we test for impairment annually. So all intangible assets that do not have a definite life, they are without a definite life, we test for what? Impairment annually. But we don't amortize them. No amortization. Examples of such assets are one, goodwill. So goodwill is one of the assets that do not have a definite life. Good. So That is. So I'm done with this. So if it's with definite life, depreciate. Depreciating intangible asset is what we refer to as what? Amortization. Amortization is a term used for depreciation of what? Intangible assets. Good.
To go to that definite, like what we
Intangible assets without definite life, we don't amortize them. Instead, we test for impairment annually. Every year, we test for impairment. So any intangible assets without a definite life. Good. The same thing applies to land. In fact, in financial reporting, if that asset does not have a definite life, we don't depreciate that asset. So in financial reporting, any asset that does not have a useful life, we don't depreciate it. A critical example is land, freehold land. Land, who can tell us the useful life of your land? No, it's forever. So therefore, we don't have.
the lease land because
Good. But there are some special type of land that we depreciate. That's the leasehold land. That one, the land that you rented it, maybe it's for 5 years. So that land, you use it for 5 years. They can depreciate it over what? The 5 years. So there are two types. Leasehold land, which must be depreciated. Freehold land, we don't depreciate it. So basically, that is the game. So let's see. Now let's quickly talk about internally generated intangible assets before you go for our first break.